Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, hi guys, welcome back to the channel. So for those of you who are new here, then this is the Greedy Trader channel. So on this channel we get very real about trading. So if it's your first time here, I'm guaranteeing you're gonna see something very, very different. I'm guaranteeing you're gonna see something that you've never seen on any other YouTube channel to do with trading or investing. Now, I've been in the business for 15 years plus, right? There is nothing I don't know about trading or investing. I used to be in the institutional space, as well as like some of you guys in the retail investor space as well, which is technically what I do now. I manage a fund. I'm in the retail investing space because I don't sit on an institutional desk anymore, so don't consider myself an institutional trader. Now what you get here is a lot of realism, and one of the things we're going to talk about today, and this is going to be a lesson, right? This is going to be a session where you're going to get a lot of value, and it's going to be a lesson for you. Now, as most of you know, I do a lot of my videos around market profile. So I've got a time price opportunity chart, as you would expect to find in any professional trading arena. And if you're not seeing that, that is part of what the problem is today in trading. There are so many influencers who are out there talking about trading. Now this particular video today is going to be about volume, right? How you use volume trading in general, how you use volume in your trading today. A lot of people don't know how to do that, and I'm going to show you partly on FX. I know you guys love Forex, and I'm going to show you partly on a TPO chart so you can see how what that looks like in market profile. Now for those of you who've been with the channel long enough, I have other videos, so I'm pretty sure that a lot of you guys have already seen this and you're already putting it to good use. One of the things that I can confidently tell anyone who's watching this YouTube channel right now is that when you come in here, one of the things that you get is value. If you were to walk away from this channel feeling like you haven't got value, then please let me know.
Why didn't you tell me?
Right? Because at the end of the day, I do this because I believe that there is a lot of nonsense influencers out there telling you to do things that are ultimately gonna destroy your ability to do this business. And why are they doing this? It's because they're being rewarded, right? Now, don't take it from me. I'm a really small YouTube channel. People here, they're here because they're getting value. Now, if you take a look at the videos above me and the videos below me, I mean, some of these guys, have hundreds of thousands of subscribers. So they're dominating the YouTube algorithm. They're creating a narrative that isn't true. And that narrative is being fed into more and more and more as more and more people subscribe and follow these guys.
It was all bullshit.
Now, I'm not telling you shouldn't follow guys that are interesting to you, that are entertaining. At the end of the day, this business, if you're any kind of media professional or media personality, it's about entertaining, right? Your audience needs to come and they need to be entertained, right?
Are you not entertained? Are you not entertained? Is this not why you are here?
Now, of course, that is not the sole reason someone should be watching a YouTube video like this. Now, don't get me wrong, having fun whilst you're learning something like trading is very, very crucial to keep the morale up. But what you don't want to do is be creating false ideas or false strategies or false trading methodologies you don't want to be putting that out there, because that's destroying people's ability to do this business. And that's one of the things that in this channel we're super keen to expose. Now, times are tough, right? I'm sure a lot of you guys, and you know, this is real talk right now, right? Times are tough, right? A lot of people are struggling. Most of you are watching this YouTube channel because you want to learn how to trade so you can make things better for yourselves, and that's perfectly fine. But you have to bear in mind that there are people in this business who are going to deceive you because they're going to get rewarded for deceiving you.
Woo! More money, more money! Ah!
When I started this channel, it goes all the way back to 2012. I was super keen. I really wanted to show people the potential, right? To not about just trading Forex or trading futures, or it wasn't about, it's because when I started this YouTube channel, a lot of people, they didn't know anything about finance. I doubt if even YouTube knew the best kind of videos to suggest to people. So the first thing they did was suggest the most entertaining videos, and that makes sense. However, there were people like me at the time who were making YouTube videos about trading, were making YouTube videos about investing. But also in 2012, I was a professional, right? So I had other things to do with my life, so I couldn't really put a lot of time into making videos for people as much as I wanted to. That said, I did know that there was a need out there for people to learn how to do this. We're talking 2012, it's 2024 right now, so we're talking going back quite a few years, right? Can you imagine that? And there were people who are trading a day right now who are in like early 20s. Back then, some of them were like 12 years old.
Daddy! How you guys doing?
Right? So let's put this in a perspective, right? I'm an older, much older person. I'm like a first cohort millennial, which means I'm in my 40s, right? So I've been doing this business for a very long time, right? And everything I take from it right now, I'm happy to put out there for free. And that's one of the things you're going to find here. I have a Discord server that you can join. It's completely free, and I post a ton of content on there. Some of that involves trades. You guys know that I'm huge on premium selling. It's one of my core things I do here. I'm massive on it, because I believe that if you're going to succeed in trading, you need to know everything about trading. So that's the purpose of this channel. And I kind of wanted to drop that here because I'm well aware of the struggles, right? So it's sometimes it's super painful to see what's being put out there and what has been put as value. So I can promise you guys that if you're new to the channel, from this video onwards, all you get is value, the kind of value that will help you develop. And all I ask from you in return, right, and it's not about you, it's about the other person who is looking for this kind of information. It's going to be life-changing, right? A lot of people are looking for that. They're looking for life-changing information because they've been following the crap for so long, right? And if you support the channel, all you need to do is like, comment, subscribe, share it, and with everybody who's interested in this that you know. And your voice is going to make the YouTube algorithm scream, and more people will find this. This video will spread like a virus, and what it will do is eventually root out some of the fake videos that keep permeating on YouTube. And you know, the interesting thing is, other people like me, because I'm pretty sure I'm not unique, right? I'm not an anomaly. There are other traders who've done pretty well and they want to share this information, but the stuff that we're talking about is the kind of stuff that you're probably not going to find anything about on YouTube. And if you do, someone is trying to mislead you. It's some influencer who doesn't actually understand what they're doing, and they're going to mislead you, and then eventually you're gonna reap the rewards, put it that way. So I want you guys to help promote the channel, right? If you do that, the channel will spread really fast and more people like you would find out, and there's going to be a net effect in the entire marketplace. It's not, you know, again, I'm not saying that you know this small YouTube channel is going to be a market mover, but what it would do is it will certainly change people's attitude towards trading, and there's going to be a big impact, especially for those who are trying to deceive people, and they know who they are.
Will the real Slim Shady please stand up? We're gonna have a problem here.
Right, I'm not gonna have a go at like prop firms and stuff like that, because the reality of it is that these guys are not doing anything of value, right? They're not doing anything of value. A lot of traders feel that they're getting an environment provided for them and all of that good stuff. It's not happening. Anyway, before someone tells me in the comments that I chat too much, I think we should get on with the video. But I just wanted you guys to know this, because I know a lot of you might be seeing this video for the first time. For some of my older audience here who've seen a lot of my videos, they know what I'm about. But for some of you who are new, I just want to give you guys that assurance that I'm not one of those kind of trading YouTubers, right? This is a faceless YouTube channel, because the focus is learning, right? That's it. That's all it is for me. I have no interest in becoming a personality, right? I have no that's why, you guys see my thumbnail, right? It's puppets, because that's what I think they are. I think the people, all these talking heads, they're puppets, right? They're puppets that are designed to mislead you. They want to puppeteer themselves into misleading you. They have someone who's asking them to do this, whether it's a broker, whether it's some other. They're basically, you're the cannon fodder, right? Yeah, but anyway, for another video. All right, so guys, let's talk about volume analysis, right? So taking this back, right, we're going to go through this step by step. For those of you who've seen my previous videos, we spoke exactly about the move here in cable, and what I did promise a lot of the guys in the Discord server as well is that I'm going to do a video talking about volume. All right, so the first thing we want to take into consideration when we're looking at volume as a trading methodology is, one, the session the volume's occurring in, and two, how much volume is occurring relative to prior periods and also relative to the current period. What do I mean by that? Right, so let's take this day. Let's zoom out here. Let's make this really big so everyone can see. So you can clearly see that most of the low volume here, so if we take it from 10 o'clock, which is the 10 o'clock London time, that's the market open. But let's fast forward to midnight, which is what I like to look at more. So we can see that that's technically where the Asia session kicks off, right? So new day, 24-hour market, the Asia session kicks off. What you can always see is that the volume here is very light. It's very low liquidity. And then as we push into the London session, we can see the volume peaks at 7 AM, which is a major session. And then finally at 8 AM, right, the volume gets the highest. Now let's take a look at this for a second relative to the prior day. So we can see at 6 PM, which is, let's see, 6 PM London, it's about just post the FTSE close, or this is 7 PM, my bad. 7 PM London, just post the FTSE close. That's, you can actually see that the volume was very peak then, right? Usually that's based on some other kind of news, for example, like the FOMC, and that this kind of stuff can cause later volume in the day. So that's the highest volume of the day. Now, look at this in contrast, right? So we can see the highest volume of the day was in the London session, right? Which is rather unusual because the highest session of the day tends to be in the US session, but this day will really peak. And that was probably also in response to some kind of European data, right? So that's how we start to see traders' behavior relative to prior days, right? So you can make little deductions, news event, major news event. And what did we have here? As we always say, this was a liquidity high. So there are a lot of stops there. We took out those stops. We pulled back, right? And then we started to go lower, right? Because we took out the liquidity at the top, right? And if we go further back, we took out liquidity here at the same time. So we had two areas of liquidity that were completely wrecked. And then of course we can see the market reversing, right? And again, if you haven't seen my video on liquidity trading, then you should check that out. I've got a library of videos now that you can go through. So we can see that it's evident, right? And that was in London. So if you were a trader, the first thing you should be thinking about, you've got one, high volume, right? Volume, when you compare it to previous days, you can clearly see it's relevant volume. There's a lot of people trading here. It's happening at a market high, right? So it's not happening at a market low, it's happening at a market high. So there's a good chance that there's an overwhelming amount of sellers, usually at highs, right? Like I always say to guys that intuitively, if the market is going up, it's an advertising mechanism. It's advertising prices higher because it wants to lure you into paying a very high price for an asset. So if the market blasts off to the long side and it's at a relative high, right, and it's trading over a previous high, right, like this one here, then you can expect there will be an abundance of what kind of stops usually. So if it's at the high of the market, we're going to say buy stops. So that means that they're going to be people who've put stop losses, buy stop losses and buy stop orders up here to buy at very expensive prices, either to exit them out of the market due to a loss or to trade breakout strategies, right, which we know doesn't work. We've spoken about this time and time again, that if you're a breakout trader, you're probably losing the most money.
Reinvest the earnings into foreign currency accounts with compounding interest and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
And how many times are you going to turn around and see influencers teaching people breakout strategies? They're all over. So you can clearly see that you've got 2 points of reference. One, high volume, right, which is what we're talking about today, volume trading. So just using this metric alone, you're identifying a trading opportunity. So you've got the highest volume of the day trading at 8 a.m. Why did I take the 8 a.m. London session and I didn't take the 7 a.m. London session? Because that would have been high volume too, right? Because it was low and then we had a peak here. Well, why didn't I go short here? Well, it's really simple. I've said this before. The 8 a.m. London session, no one puts a trade on at 7 a.m. No institution, no trader will do that.
No.
What tends to happen is that the market gets manipulated higher. We see a lot of maybe early retail coming in, right? You know, retail traders are the ones who wake up really early, 4 5 a.m. and they come to their screens and they're ready to make trades at 7 a.m. because obviously they've been sitting on their chairs for a couple of hours, right? So some people are up at 4 a.m. making coffee with bags on their eyes. This is what we see, guys. This is what you see on YouTube, right? When you look around on YouTube, what are you seeing? You're seeing guys with bags under their eyes, with coffee in hand. It's 4 o'clock in the morning and they're saying they're prepping to trade.
This is not funny! It's not funny!
Right? You see some guy doing press-ups in a room, or, you know, this is, you know, it's total BS. You shouldn't be doing that, right? So you should be getting enough rest so that when you come to the trading day, you're ready to get into action. You don't want to come in with bags under your eyes. That stuff is just, it's not good for you, right? And if someone tells you that, oh, I worked in an investment bank, I get up at 3 a.m. in the morning, let them tell you why they do that, right? They do it most of the time because they're covering a desk in a different time zone. They're not doing it because, well, you know, it is what it is. And if someone works in investment banks and they're on a sales desk, right? I'm not saying they're a trader now, they're on a sales desk. They're getting up early in the morning because they have to do a lot of pre-market prep so they can decide what BS they're going to sell to their clients, right? Because they're sales guys, right? The idea is to get money into the bank. So that's why you're going to see them get up in the morning, is because they need to do all this prep. So by the time the market kicks open, they have all these ideas to sell so that these guys can come in and put trades on with their traders. That's banking for you guys. But they're not doing it though because it's really important to be up in the morning at 7 a.m. No, it's just because it's the way their institution works, right? When you work for someone, you have a certain level of restriction. You got to do what they tell you to do. And that's kind of what it is. These guys have had a tradition of behaving in this way. So they have company policies like everywhere else. They're just going to do what they're told. Now, you're an independent retail investor. You should know that you're on the other side of that behavior. So do you honestly think it's wise for you to get up at 5 a.m., 7 a.m. to put trades on? It doesn't make sense. So really, what you should be doing is at the very earliest, waking up at 6:30, 6:45, you're getting yourself a drink so that by 7:30, you're sitting down and having a look at how that 8 a.m. session is going to open, which is the session that trades are going to come in. That's the session that professionals play with, right? Because that's where you get the full Monty. A lot of data comes out of the UK around about these kind of times. So you don't want to be front running that information unless you have information that others don't have. Now in that scenario, that's completely different. Insider trading is legal in Forex. So if you have a tip or something that's legit and you want to execute that, you want to front run everybody, then of course. But most people in your institution will also have the same tip, right? And they're going to be doing the same thing. So that might make sense. But outside of that, if you don't have that kind of information, you should be waiting for the market reaction, right? What we do know is a fact is that the market moves from liquidity to liquidity, right? So by that we mean the market will move from a liquidity low, right, where it's taken out liquidity, to a liquidity high, where it will take out liquidity, sell off again, maybe into demand, and it will move back like it's doing right now into a liquidity high again, where we could see a sell-off, right? So that's what we're positioning for. We want to see the stops being triggered. So go back to this day. What happened? We traded up, like we said, early session, moved into a very premium price, a very expensive price. This is a premium at this stage. And what do? We find a lot of buyers up there. I mean, you can't make this stuff up. Everyone's getting long on their breakout trades. What happens? The market reverses against them. And some of you know what I'm talking about. You have been victims to this kind of stuff. So we get a big waterfall candle, right? All we're looking to do now is wait for a bid slightly back up, right? And then we want to go short on bids, right? 126.84, and then we're looking to cover into demand. What is demand? Demand is where there was a previous area of very high volume that we can clearly see was buying volume because the market went higher. This could likely be a place where the market could support, and that's what happened right here. That was yesterday. Nasdaq open 2 o'clock, we supported here. And what I always say to traders is, if you're short, this is where you're covering back into demand. You don't necessarily want to go long here. I appreciate the market went up, but that's bad practice. If you start getting long on demand all the time, there are going to be times when you're going to get taken out. So realistically, you don't want to focus on getting long on demand, right? That is not what you want to do. So you want to be very, very conscious, guys, of this, right? It's really important, right? So again, point in case, and sorry guys, if you're hearing the smoothie blender, that's my wife making herself some green juice or some stuff like that. But anyway, so we can totally ignore that, right? But the reality of the scenario is, guys, it's demand. So we're going into demand, right? Reality. So we want to cover and get out of that trade, right? And our next opportunity should only come when we take out stops again, right? Point in case. Right, now this is important. So we want to map out all those important areas of demand. So you can see that again, right? Another example here where 1 o'clock New York open was a source of demand. We can tell because the volume was the highest for the day on this day, and this is going to act as relevant support. So as we traded down, right, we didn't quite take liquidity. We kind of did, but the volume was really low. It was 7 a.m. So we know historically that we don't get big market moving information at that point. Most traders will miss out on a trade like this. But nonetheless, we picked up demand. New York open again, 1 p.m. The market supported on demand, right? This might be a good place where you think I want to get long, right? But on the same token, you have to think we're going into a liquidity high, right? Which is taking us all the way back to the Asia high. And then we start to sell off back into the range. What do we want to do? We want to maintain at that point a short position. This is a short-term liquidity low. If we go further back, this is not quite a premium price. But what you don't want to be doing is you don't want to be buying the market. You want to be short the market as a default. Now, what do? If we go into the Asia session, we get a liquidity hunt here, and then we get a second one here at 7 a.m. again on London open. Then we start to track back. What I say to traders is, well, reality of it is that there's a lot of liquidity up here now. The chances the market is going to go for that is going to be very high, and we saw that the next day where we got the real volume that we're supposed to be looking for, which is the Chicago. So point in case, guys, what did you just notice, right? We had a lot of volume trading New York open, right, where the market supported, right? We had a lot of volume just basing itself in New York, then the Nasdaq, and in Chicago here. That's a solid area of demand, and it pushed the market higher. So I'm looking at this point as a strong level that the market will support at. So I'm not going to go short at these points. But I also don't want to go long because I know I want to pay a premium, right? I want to sell at a premium when we get high enough, right? And what do I get? We see this here, Chicago open. That's the futures traders at this point, right? And if we draw this back in, we're above a liquidity high, right? We're now really close to trading a premium. We've got what we call minus development here, where we had this huge amount of order flow to the downside, and now we're trading really close to it. So once we broke down in, I'm looking for short opportunities as we're coming down, and then I want to cover towards the end of the day, or at the very riskiest, I want to push this to the London Open. Well, we'll cover at the London Open, right? And as you can clearly see, that was the right choice. And I actually have another video, right? If you come to the Discord server, I posted this exact trade on there that I did to prove to people that patience pays, right? It's all there for everyone to see, right? And I was saying to the group that this is the last trade I'm posting up there, because I'm not a guy about P&L. The last thing I want is people thinking that trading is easy. That's not what we do here. We need to make it realistic, right? Guys, what I'm telling you now, this is a 6-figure, 7-figure trading strategy. If you got the capital, right? And what I'm not saying here is that you're going to turn $5,000 into $1 million, right? You know, that stuff is just toxic, right? We don't even go there.
I think Twitter brings out the worst in its users.
But what I'm saying to you is that if you have the money to turn this into a 6-7 figure strategy, you can do, right? Because this is what professionals do every day. These are the things they're looking at. They're looking at volume. They're looking at where that volume is occurring, what session is it occurring in, and what does it mean when it occurs in that session. Anyway, guys, this is something we're going to talk about a lot more, right? So I thought it was important that we jumped onto the volume side of things. So let's recap. Step number 1, how is this the highest volume of the day? When is it occurring? We know traditionally the highest volume usually occurs in the Chicago Open. If you see volume in a London session that historically is higher than what you've seen traditionally in a US session, that could be Chicago, that could be the NASDAQ Open, that could be the New York Open. If it's higher, point in case, 22nd of February, 8 a.m. London Open, this was higher than every other volume day with the exception of the New York Open on the 15th of February. That tells you that this is relevant high volume, and it causes you to change your behavior a little bit. Why? Because of the trade location. The trade location is a premium, which means it will invite sellers. Change your behavior. Of course, we came into the US Open, NASDAQ Open, posted a lot of volume, and then started to break to the upside. Of course, 126.32 if you wanted to be long and you want to carry the overnight risk. But if you traded the London Open short, then one of the rare times we've seen a big move in London, then you would have got that. If you're waiting for the US Open, then there's nothing wrong coming in off the back of this volume, because it's pretty standard, and I think that was confirmed in the Chicago Open with rising volume. And then of course we moved higher, and it's likely that we're going to move to the upside, take out the liquidity, and move lower. We will discuss this in future videos. So if you don't believe me, come back, check what's happened. We could trade above the liquidity and come short. My bet is that we do that around about sort of 127.40s. But let's say we overextend, it's not a big deal. If it's in a major session, we're likely to invite a sell-off. So it gets you into the habit of being patient to put your trades on. Awesome stuff, guys. Till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?